The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Yep, that's me, Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. 877-927-6648. 5 days a week, you can catch Breakout Investing from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. You can pick my show up as a podcast on iTunes if you can't listen live. Don't forget you can listen to all TFNN programming on your smartphone. Very easy to do that way. Just open your smartphone browser, type in tfnn.mobi, and it'll start streaming just like that. Very simple, very easy, very convenient as well. Don't forget about Tiger TV. That is available on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived on Channel 13. And not only do you get the show audio, but you can look at charts live right along with me. For those of you watching Tiger TV right now, and throughout the rest of the show, bear with me. I'm still having some isolated internet connectivity issues in the office here, but should be okay. But if a chart should fall off your screen, we'll get it back up as soon as possible. Don't forget about the Great Panther Summer Silver giveaway. Not the summer. I always say summer. It's super. I think for the Super Bowl that's coming up in a couple of days, this weekend on Sunday. So it's a Great Panther Silver, Super Silver giveaway, and you can sign up for your chance to win on the homepage of TFNN.com. We started it on Monday, so all day today up until 6 p.m. Eastern, every hour, we're going to be announcing a winner of a free piece of silver, half-ounce silver bar, full-ounce silver bar, and that is going to run through tomorrow. So every hour from 9 a.m. to 6 p.m. Eastern, we're going to announce a winner on today's show. And just head over to the homepage of TFNN.com. You can sign up, register for free right on the homepage. All right. Thursday, one more day of trading. We've got about 50 minutes left to go in Thursday's session. Let's take a look at the S&P 500 here, down to about 2 points to 1499.71. So just a hair underneath that 1500 level. We've got the Dow Jones Industrial Average down near its session low here, down 32 points, 0.2% to 13,878. And the NASDAQ Composite, see what the tech index is up to today. Slightly higher, up a little more than 1 point to 3143. Taking a look at volume on the exchanges today. Yesterday, NASDAQ volume was above average for the fifth straight session. NASDAQ volume on Wednesday totaled 1.95 billion shares. We're tracking about 5% higher than that today. Volume on the New York Stock Exchange Wednesday, it's been average or below average for several sessions in a row. Yesterday it was average at 700 million shares. We're tracking very close to that level with about 50 minutes left to go in Thursday's session. I think I heard CNBC say today that the S&P 500 is on track for its best monthly performance since 1997. We're talking, about a 5% gain for the S&P 500 for the month of January. So, overall, the market looks okay here. It does seem a little bit tired. Let's see what the jobs report has to say tomorrow. I've been taking a look at the indices in relation to their 10-day, 20-day, 50-day moving averages. And, just a few minutes ago, I was looking at the Dow where it's trading now. It would only be a 4% correction for the Dow, 586 points would take it down to its 50-day moving average. And, when you look at the sort of inside the context of where the Dow has come from, seems like a fairly tame correction. Now, it may seem like 586 points to the downside would be quite harrowing, but that would only be about 4% from where it's trading right now. S&P 500, for it to come down to its 50-day moving average, you'd be looking at a pullback of about 4%. The NASDAQ composite looking at about a 3% pullback for it to get down to its 50-day moving average. So, market's going to consolidate at some point. The question right now is new money going to continue to come in from the sidelines. And I do think the pieces are in place for more strength here. But remember, inside a bull market, you can have pullbacks along the way. A lot of growth names out there have been running for a while. They would probably benefit from a little bit of a consolidation phase, and that could come. So hard to be playing outright offense right now. Definitely been playing more defense than offense at this point for the Ultimate Growth Stocks model portfolio. But still respecting this market and not seeing meaningful sell signals. But again, the jobs report tomorrow could be a market mover. Interesting IPO today. Tri-Point Homes, ticker TPH. Tom, Paul, Henry. Company raised $233 million by offering 13.7 million shares at 17. That was above the expected range of 14 to 16. I don't have a chart for Tri-Point Homes, but the ticker is, again, TPH. This is a California home builder, small company. Looks like it's going to have a market cap of around $500 million by the end of today, maybe just a little bit underneath that. But this was an upsized offering. Tri-Point initially was going to offer 11.7 million shares. They raised it by 2 million last night. This is a builder of single-family homes based in California. Home builders have definitely been in the news. We had 3 more home builders that reported earnings today. MDC Holdings. Taking a big hit today, down $2.34, 5.6% decline to $39.42. They reversed a year ago loss with profit of 41 cents a share. That beat the consensus estimate by a penny. They missed on the top line, though. Sales good year-over-year growth, up 58% to $335.1 million, but that was below the consensus estimate of $367.6. So about a $31-32 million revenue miss for MDC Holdings. The stock is getting punished as a result. Other home builders out with earnings before the open today. Pulte Group, that is ticker PHM. It took a beating earlier in the session, but has rallied back nicely. Impressive rally by Pulte Group. Hit a low of $19.11. Now it's trading at $20.70. Still down 1.7% on the day, but has rallied nicely off its lows. The numbers pretty solid here. Earnings up 155% from a year ago to 28 cents a share, 3 cents above views. Sales up 24% to $1.57 billion. The estimate was for 1.5. So good bottom line and top line beat at Pulte Group. And MTH is the final home builder we can take a look at in terms of earning. Very, very busy week of earnings. Lots of earnings reports to get to today, and there'll be more tomorrow on Friday, and a very, very busy week next week as well. So we're still right in the heart of our earnings season here. Meritage Homes, they also reversed a loss with profit of 62 cents a share. That beat views by a full 20 cents. So impressive earnings from Meritage. Sales up 48% to $364.6 million. That was almost $10 million above the consensus estimate. Meritage doing pretty well here. It recently broke out over 43. It is up another 2.8% today to 44.35. So decent look at the home builders there. A couple of ancillary housing plays came out with earnings today. Let's take a look at Sherwin-Williams. This has been a monster performer in the market. Kind of a wild day of trading today. Hits a low of 159.81. It is has rallied back, though. It's now up 42 cents, 0.3% to 162.73. They missed earnings by 3 cents with profit of $1.12 a share. up 24% from a year ago. Sales were pretty much in line, up 7% to $2.2 billion. The company's guidance for 2013, though, was disappointing. They expect earnings between $7.45 and $7.55 a share. The consensus estimate right now is at $7.84. So investors don't seem to be too concerned by that weak guidance because Sherwin-Williams is now trading in the upper half of its range and has a 42-cent gain right now. So Sherwin-Williams, and finally let's take a look at Whirlpool. That'll be it for the housing sector today. Whirlpool, just an extended stock here. You can see it's been respecting its 50-day moving average, going higher and higher and higher. Tough to really find an entry point here. I suppose you could have bought some here at 105 when it gapped up here. Remember this January 2nd, a lot of stocks gapped up. The market gapped up on that day. So probably the last buy point here was 105. Came down to its 50-day moving average, found support again. But Whirlpool up 5.6% today to 114.82. This is the company, Maytag brand, KitchenAid appliances. $2.29 a share was the profit. That was a little bit better than expected. Sales down 2% to $4.8 billion. That was a little bit below expectations of $4.88. But Whirlpool, a lot of cost-cutting initiatives going on, and this has been a strong performing stock that continues to perform well today. U.S. dollar index down again, not by much, down 0.1% to 79.20. February gold takes another hit today, down $19.60 to $1,662 an ounce. Let's check in on the Spider Gold Trust here, see what the GLD is up to, and it is down $1.29, 0.8% decline to 160.90. 50-day moving average continues to be resistance for the GLD. So this is a chart, again, that is not telling me that higher prices should be expected anytime soon. Gold still looks very weak here. March crude oil fell 45 cents, 0.5% to $97.49 a barrel. Oil has been in rally mode, no question about it. Prices finished January with a gain of 6.1%. According to data from FactSet, it was the strongest January gain for oil since 2006 when prices were up 11.3%. Some energy earnings here. Let's take a look at Atwood Oceanics. This has been a tremendous performer, ATW. Certainly a lot of good news priced into this stock. You had a recent breakout over 49. Stock right now trading at 52.66, down about 1.1% on the day. But this is, again, just a very volatile, erratic day of trading. This is an outside day again where the intraday high, intraday low easily exceeds the intraday high, intraday low of the prior session. So Atwood not showing the best technical action today. Very, very heavy volume. The earnings here, $1.10, up 10% from a year ago. Sales up an impressive 33% to $245.1 million. So that's it on Atwood Oceanics. Stick with me, folks. Lots more to come. Breakout Investing on TFNN. Ken Shreve with you. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. We do have a winner this hour for the Great Panther Silver Super Silver giveaway, and the winner today is Marty from Mesa, Arizona. Love the state of Arizona. Marty wins a half-ounce silver bar from Great Panther Silver and TFNN. So if you're listening in Arizona, you know Marty. Have him call us sometime today before 6 p.m. Eastern so we can get that silver bar into his hands. And don't forget, folks, there's still time to register for the the Super Silver giveaway that is happening for the rest of today until 6 p.m. Eastern, and then all day tomorrow from 9 a.m. to 6 p.m. Eastern. You can register right on the homepage of TFNN.com. All right, let's see here. Atwood Oceanics, decent earnings in the energy patch. We also heard from ConocoPhillips today. See what ConocoPhillips is up to, and boy, ugly day of price performance for COP, down 4.7% to 58.22. So you had a rough day for the stock yesterday ahead of earnings, and it has fallen all the way down to its 50-day moving average, trading slightly underneath this support level right now. The earnings at Conoco down 8% to $1.43 a share. Sales up 2% to $16.4 billion. This is a stock that gives you a nice yield of 4.5%, but anytime you're seeking dividend yield, you really, in just about every case, you want to make sure that stock is also delivering relative price strength as well. So when ConocoPhillips was rallying off its lows back in mid-November, you had a high-yielding stock showing relative price strength. Now you've got a high-yielding stock that looks like it could be ready to start lagging the market for a little while. It's still too early to say, but a lot of sellers in the stock today on disappointing earnings. Yield on the 10-year note, 1.99%, sitting just underneath that psychologically important 2% level. 30-year bond at 3.17%. Merger and acquisition news today. Instant win lottery ticket company Scientific Games. Let's take a look at SGMS. This was the acquiring company, and boy, I mean, this price action like this is really hard to understand. I mean, just to see these price bars like this, but it's kind of the way things are these days. In fact, we're going to look at a couple of earnings reports today, which shows a similar price bar. But Scientific Games hits a high of $10.88. Investors initially liked the sound of the fact that they were going to acquire gaming equipment company WMS Industries for about $1.42 billion. Scientific Games hits a high of $10.88. It is now at $9.13. Still up 2.2% on the day, but trading all the way down at its session low. Let's take a look at WMS Industries. This is the acquiree. Huge gap up for this stock. WMS up 51% to $24.76. So that was the lone deal that I could find today. Let's take a look at 3D Systems. This one continues under selling pressure. I really want to be careful with this stock. It is coming down to a key support level here. It has rallied off its lows, but hit an intraday low of 54.01. 50-day moving average is at 53.30. So at the very least, 3D Systems looks like it's ready to base and consolidate gains for a little while. We still haven't heard from 3D Systems in terms of earnings. Earnings not due until February 25th. So still have a ways to go before we hear from 3D Systems. The numbers are going to be pretty good. I looked up the estimates here. Earnings up 137% to 38 cents a share. Sales up 49% to $103.9 million. So obviously there's a lot of optimism about this company's ability to grow earnings going forward. That's why you're seeing some multiple expansion. But sometimes stocks get ahead of themselves, and that could be what's happening with 3D Systems. So we'll watch in coming days, see if it's going to be able to hold on to its 50-day moving average. Busy day of economic data. We had weekly jobless claims up 38,000 to 368,000. That was more than expected. Economists were expecting a smaller increase, up 15,000 to 345,000. We also had December personal income up a whopping 2.6%, much more than the consensus estimate of a gain of 0.7%, but that 2.6% increase was skewed by one-time dividend distributions. Remember all those special one-time dividends that were announced late last year, November, December? Well, that counted as income. Wages were only up 0.6% in December. Spending up 0.2%, a little bit below expectations. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, friends, to Breakout Investing on TFNN. Let's do a quick check of the markets here. We've got a little more than about 25 minutes left to go in Thursday's session here. Right now we've got the Dow down about 27 points to 13,883. Tech stocks outperforming a little bit, up 2 points to 3144. S&P 500 down 2 points to 1499.96. Why don't we just call that 1500? Nice recovery for shares of Facebook today. This is a current holding in the Ultimate Growth Stocks model portfolio. We did buy this stock right, so even though it fell sharply at the open today, we were still up on the position. So going to give this one room to work here, but very impressive price action today for Facebook. Hits a low of 28.74. Now trading at 31.41, pretty much up near its session high, up 0.5% on the day. The numbers after the close yesterday were pretty good. Didn't see anything alarming here. They made 17 cents a share, up 13% from a year ago, 2 cents above the consensus estimate. Look at that revenue growth, up 40% to $1.58 billion. That was better than the consensus estimate of $1.52 billion. Mobile revenue accounted for 23% of all ad sales at Facebook, compared to 14% in the third quarter, so nice acceleration there. Mobile monthly users rose 57% versus a year ago. That was a little bit of a slowdown from 67% growth in the third quarter, and probably what initially spooked investors. But other thing you have going on here is profit taking. Remember, Facebook was a $19 stock back in mid-November. Now it's trading, again, around 31.40 was. So all in all, a decent earnings report. Facebook has made no secret of the fact that they're going to be spending money this year building out their infrastructure. And so expenses are going to be high. That could impact earnings. But, Amazon is in the same situation. Amazon has been building out its infrastructure. Market's been giving Amazon a pass. So I suspect that could be the case with Facebook. If the market knows that Facebook is spending, all companies go through periods of time where they're spending money, to make money, and that's where Facebook is now. So impressive recovery for the stock today. And again, this is a current holding in the Ultimate Growth Stocks model portfolio. If you want to check out 30 days free of my weekly newsletter, you can do that right on the homepage of TFNN.com. Just go to the newsletters tab on the homepage, and then click that, then click on investment newsletters, and you can sign up 30 days, no obligation. It's a weekly newsletter. I publish every Tuesday. In between weekly updates, you get email buy alerts, sell alerts, market updates, things like that. Impressive move for shares of Tractor Supply, TSCO. This is a retailer in the agriculture space. Monster move here, up 10% to 103.65. Big gap up for the stock. Let's go ahead and take a look at a weekly chart for Tractor Supply, because on the one hand, this was a stock that was really not acting all that great. It had come back to life recently, but you look at a weekly chart here. When it was coming down in price as we headed into the end of last year, it started to show some resistance at some key moving averages, but then buyers started, coming into the stock here. And now what you have is a stock that, could be in the early stages of an upside move here. On the one hand, you look at a monthly chart, it does look like a late stage run, but in the summer of 2011, Tractor Supply corrected from about 70 down to 45, 50 in that area, and what it did was it undercut the low of a prior consolidation right here that formed March, April, May, June in that area. So what that did was kind of reset the base count. There were enough sellers that got shaken out of the stock in the summer of 2011 where it basically wiped the slate clean. So then what you have is a first stage base breakout here, and this looks to me like a second stage breakout. So it may seem like it's too late with Tractor Supply, but good volume in the stock today, big percentage gain. It looks like there are big buyers in that stock today. Looks pretty good here. Another earnings superstar today would have to be Citrix Systems, CTXX. Big gap above the 200-day moving average. This headed into earnings was definitely a laggard stock. A lot of stocks have been working here. This was technically not all that healthy a stock headed into earnings, and I think its technical weakness headed into its earnings today is kind of showing itself through right now, because after hitting an intraday high of 75.50, it is near its session low. Stock is still up 9.4%, big gap up, but definitely some sellers knocking that stock down from 75, 74 down to where it's currently trading at 73.29. So the numbers were pretty good at Citrix Systems. Earnings were up 15% to 90 cents a share. 6 cents above the consensus estimate. Sales up 19% to $740 million. That was $34 million above the consensus estimate. Citrix makes virtualization software that allows computers, mobile devices to access applications from remote servers. Citrix is in a similar business to VMware. Remember, we heard from VMware earlier this week. And here's where VMware is trading right now, down around 76.48. Here it was, trading around 96, 98 bucks earlier this week on Tuesday. It gapped down. They're cutting 900 jobs, disappointing revenue forecast. So, just because one virtualization company is having problems doesn't mean the whole group is having problems. That's the key takeaway here. Yes, it's true that when stocks move, they tend to move in groups, but believe me, there's a lot of virtualization companies out there that are firing on all cylinders right now. A lot of cloud plays that are firing on all cylinders, others that aren't. And the ones that are doing well and executing are those typically that are showing the best relative price strength. So headed into earnings for VMware, it was kind of a laggard in the group. Citrix, another stock that was, kind of lollygagging along, and good day for the stock today, but still kind of far off its highs. Another big earnings report in Techland today would have to be Qualcomm. QCOM, big gap up for Qualcomm over resistance at 65.50, something like that. Stock is up 4.1% today to 66.15. Again, another stock trading near its session low. Nice percentage gain, but the stock hit, and as soon as it hit a high of 67.44, sellers started to come in here. Last trading at 66.15. Again, up 4.1%. Numbers at Qualcomm very solid. Earnings up 30% to $1.26 a share. That was 13 cents better than estimates. Sales up 29%. That's pretty impressive. Top-line growth. Sales came in at $6.02 billion. Estimate was for $5.9. Looked like today was going to be a solid day for MasterCard. MasterCard is just a classic example of a late-stage base. I've been talking about MasterCard, off and on in recent months. Have never been able to fully wrap my arms around this stock because it's one of these stocks that has made an incredible price move over the past few years. And look at what MasterCard did today. Hits a high of 535, now trading at 516, down near its session low. Only up 60 cents on the day. The numbers were pretty good at MasterCard, but the CEO talking about I think he mentioned that Europe was complicated. North American growth, not all that great. Latin America, pretty good. Asia Pacific, not bad. Middle East, not bad. But MasterCard definitely tied to the economy here, and it does have a lot more exposure in Europe than Visa does. So MasterCard down near its session low after early strength. We're not going to hear from Visa. I think Visa is next week. So we'll see what Visa has to say, and its chart is looking a little better than MasterCard's here. Shares of Visa up 2% today to 158.15. So if you don't want Europe exposure, you're going to go with Visa here out of the two. Dunkin' Brands, DNKN, still waiting for some of these Dunkin' Donut shops to pop up out here in California. Have you seen all the charts that we've been looking at today, though? Look at this one. Look at this. Hits a high of $40 a share. Reverses in spectacular fashion down to $36.55. Still up a little more than 2% on the day. We heard got earnings from Dunkin' Brands as well. But, boy, as soon as that stock hit 40, sellers in there in spades, and not a good day of price performance at all for Dunkin' Brands. Some of the casino operators. Let's take a look at Las Vegas Sands. This one is holding gains beautifully here. Nice technical breakout over 54 for LVS, up 6.8% on the day to 55.07. Revenue up 21% to $3.08 billion. That was better than expected. Earnings were down 5% to 54 cents a share. That missed estimates by 5 cents. Investors encouraged by the company's business in China. Revenue at Las Vegas Sands China rose 48% to $1.97 billion. That was a funny AP story here today I wanted to share with you about Las Vegas Sands. Apparently there were some concerns that some of the company's casinos made some big payouts. They had to pay out some pretty big bets to gamblers who won money, but there was concern about that and the amount they had to pay out. But Rob Goldstein, who's an executive vice president at the company, basically said, listen, the math is the math is the math. And in the end, those people who won some money will come back and lose it back. Isn't that calling a spade a spade? Isn't that what it's gambling's all about? I thought it was kind of funny. Anyway, Las Vegas Sands, good solid day here. WYNN, Wynn Resorts. I think we're going to hear from Wynn soon. Nice price action in Wynn Resorts as well today, up $2.51. That's a 2% gain to $126. So again, Wynn, I believe earnings will be out next week sometime. So we'll listen to what Wynn has to say. And then Fortinet, Fortinet had its day in the sun, got really hit hard. You can see here, basically starting in September, corrected from 28 all the way down to 18. It's been trying to work its way back. Big gap up for the stock today, up 22%. Isn't it amazing that a stock can move 22% in one day? Last trading at 23.68. This is a network security provider, and earnings were up 21% to 17 cents a share, 2 cents better than the estimate of 15 cents. Sales up 25% to 151.2 million. The estimate was for 144 million. So just going to check in here. I think actually the short interest not all that high in Fortinet. So bullish gap up for the stock today. Gaps above the 200-day moving average. Still not a stock on my radar. When a stock suffers technical damage like this, usually takes a while for it to recover, but the fact that it gapped up in huge volume, looks like that process is going to start to repair. If Fortinet can hold these gains, move sideways in that 23, 24 area, not give up much ground, that's a sign of strength and support. Who knows? It could, try to break out anew. But one day of price strength usually doesn't fix a stock's technical picture, but buyers in the stock today, and credit to the company for a solid earnings report. Mentioned some of these mortgage servicers. Ocwen Financial, OCN. This one is trying to get going here, going for a technical breakout over, what is that? I think it's 39.25 is the swing point for Ocwen Financial. And it's hanging in there. It's not the chart looks pretty good. Swing point is 39.25. It's up 3.5% today to 39.03. So it hit a high of 40.23. Tried to break out, but a little bit hesitant here. So overall, I'm looking at the action in growth stocks, and I'm seeing some things to like, and I'm seeing some things not to like. I'm really not chomping at the bit here to just put more money to work. We've got adequate exposure to this market in the model portfolio right now, and frankly, when I'm going through my screens and I see technical setups like this is the exception, not the rule right now. Most of the base breakouts happened back in December, early January. A lot of stocks have run, they're extended. We need to see a pullback before we can start thinking about getting aggressive again. So Ocwen looks interesting here. Some of the other mortgage servicers, let's take a look at NationStar Mortgage Holdings. It is up 5.3% today to 36.15. Still has a ways to go to get to a swing point around or just over 40. And then Walter Investment Management, WAC, rallying a little bit. Swing point here is going to be just under 50. So could see more strength in these mortgage servicers. Fundamentals, growth prospects, very bright in this group. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, friends, to Breakout Investing on TFNN. Ken Shreve with you. 5 minutes left to go in Thursday's session. Let's check in on the Dow here, down 35 points. 13,875 is the last for the Dow. mentioned at the top of the show that you can see support levels here, 10-day, 20-day, 50-day moving average. Would seem to me that the first likely stopping point for the Dow would be, the 10-day is so close. When the market does pull back here, the Dow will probably come down to that 13,626 level, which is about 250 points underneath, below where it's trading now. But that would not be that big of a pullback. Actually, it would maybe be about 1.5%, something like that. Down to the 50-day moving average at 13,302 would be a pullback of about 4% for the Dow, which in the grand scheme of things, really not that big a pullback, really, considering how far we have rallied here. S&P 500 would have to pull back about 4% to get down to its 50-day moving average at 1443. Again, I think a likely resting spot, initial resting spot for the S&P 500 would be that 20-day moving average at 1481. And the moving average lines for the NASDAQ composite, a little more kind of together here for the tech index. The NASDAQ would only have to come down about 3.1% to get down to its 50-day moving average at 3048. So, I'm not going to be concerned if we pull back here. Again, there are such a things as, orderly pullbacks and disorderly pullbacks. Hopefully we get an orderly pullback in light volume. We don't see too much technical damage done to a lot of the the big market leaders that are out there that have been leading this market higher for the past couple of months. So we'll hope for an orderly pullback here and see how it goes. Mentioned a retailer that I've been watching here. It's a speculative name, no doubt about it. Five Below. This is a company. All the merchandise priced here is priced $5 and below. Kind of trying to getting close to a breakout over a swing point here of 37.85. Stock was up nicely over the past 3 sessions, Monday, Tuesday, and Wednesday. Yesterday they had a secondary offering that was very well received. You can see how heavy volume was in the stock, but pretty strong fundamentals here at Five Below. For fiscal 2013, they're expected to earn 50 cents a share. That would be up 67% from the 30 cents they earned in 2012. Looking out into fiscal 2014, profit of 71 cents a share would be up 42% from 2013. So retailers still in the early stages of expansion. Definitely under some accumulation here, and one to keep an eye on. You're looking for an interesting name in the retail space, maybe have a little speculative money to play with. Five Below has a lot of characteristics I like to see in a stock. I mentioned all the home builders that reported earnings today. Also heard from Sherwin-Williams. Whirlpool wanted to also take a look at FBHS, Fortune Brands and Home Security. This is a company. They've got several different units: kitchen and bath, cabinetry, plumbing and accessories, security and storage. Another way to kind of play the housing market here. They report after the close today. Look for profit of 22 cents a share, up 38% from a year ago. Sales up 6% to $929.4 million. You see a little bit extended here after a recent breakout over 30, but wouldn't be surprised to see good numbers from Fortune Brands. Also going to hear from NetSuite and Wynn Resorts. Not next week. They come after the close. Coming up next, the Tom O'Brien Show. See you back here tomorrow, folks, 3 o'clock Eastern. Have a great day.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to mastering probability today, because your journey to extraordinary rewards is just one click away.